how I made $2,770.41 trading Booking. It looks like we're going on a vacation. Actually, we just came back from one. Let's get into the charts. So 306 on the 25K account and 2,463.92 on the $200,000 account. Those are the deals. If you go back to the last video, it's actually funny. This is the nature of swing trading. If you are a swing trader and you're like, man, some of these days I don't do shit, or it feels like weeks go by, I don't do shit. And then you'll just have a day where 3 positions close out on the exact same day. And it just so happens that one of them was red. If all of them were green, I would be like, holy shit, we almost made like 10 grand today. But that's just the nature of swing trading. So we did end up having that big, I ended up cutting it. It ended up hitting our stop loss anyway. I cut it like seconds before. A few minutes before it actually hit stop loss. I'll talk about that in the next recap. I'm kind of going chronologically here. This one closed out first today, then it was the booking trade, and then it was the Bitcoin trade in the afternoon. So a lot of action today, although really, did I do much? No, because I set my stops and take profits, and it's like either you hit it or you don't. Now, the only one that I actively had to do anything was Bitcoin. I closed it out before the stop hit. I just didn't like what we saw, and I was like, this is not going to happen. And yeah, so I'll talk about that next video. But Booking, 2,700, something like that, almost 2,800. Cool. How do we do it? What do we do? What do we see? Let's take a look. Jump into the charts. And here it is. Straightforward. Very simple. Great setup. Great chart. All of the above. We check the boxes here. So big picture on this bad boy. Let's just zoom this out because, you know, come on. Let's zoom it out. So big picture on this beast. Actually, you know what? For the sake of my re-editing, I already have the software set up, so let's just do this. Okay. This is okay, so we had this big picture move, right? Big trend up. Woo, we're going up, crazy, nothing crazy. You had this little, consolidation, downtrend, breakdown, right? Whatever. Broke out of that, so we're in the phase of re-zooming to the upside. So we're just looking at the overall structure here, looking good, trending our way, just what we want to see, Just what we want to see. Then I go zoom in. I go, okay, I got a big extension right here. We have a little bit of a consolidation. And then I go, whoopsies, and then whoopsie right back up. We break that consol, and that's the interesting zone on Booking. I ended up getting in on the break here, and I could have put my stop loss underneath this guy. I did not. Why in this situation was because the consolidation really was this zone right here. You can all see on the volume profile. And if we were to break this level, come back down below here, I wouldn't want to be in any way. Now, the reason why I love these trades are where you get that consolidation. Either you get a break and then it goes down and then it snaps right back up. These are like catching people off guard, and then you have the push up. It doesn't always have to happen. A perfect example of this situation panning out in the opposite direction is kind of Tesla here, where, well, it's not perfect, I guess. Yeah, it's not the exact same thing, but you had that big move down. But okay, either way, this guy, right? So there's our consolidation. Here's the area. I was like, whoop, caught you to the upside, kind of faked out the shorts there. And then it just kind of took its time and just kind of trended up and eventually hit target. So simple. Nothing crazy. Nothing crazy. Just simple trade. Why I like these? You're getting a consolidation in a strong uptrend, in a bigger strong uptrend, right underneath a all-time high, which could be a screwball move, right? Like you could go all-time highs by like an inch and then suckered right back in. Could totally happen. At the same time, it also can provide momentum. So the way I look at this, and this is kind of how my head works, you can look at this and say, I play the fake outs. I want to see all you little fuckers get sucked in on the breakout only to get fucked on the move down. And that's a valid trade or a valid, strategy and approach, right? Maybe we want to have some criteria alongside that, For me, that's why I like to look in the bigger picture trends, and I like to have my criteria that way, but you do you. The point is, to me, is as you've looked, if you were to track my trades, and you can go back and I will do these monthly recaps and I do yearly recaps and stuff, what we'll find is that we're roughly like 40 to 50%. Okay. We're sub 50, but we're north of 40, like on average after lots of trades. And so what that tells me is, well, it's actually closer to a coin flip. So you end up getting a coin flip. But the way that I look at this, I go, if we, on that coin flip, like if we go heads or tails, right? If we get heads, let's just say that I always pick heads. If we, because I'm I guess net with the trend here. This exact same thing applies on the downside. It's not just longs. The exact same thing applies in the downside. But if I go heads with the trend, whether it's up or down, if we're going down or if we're going up. Now, markets, we're a bull market, right? We're going up. Generally speaking, you're going to have more long trade opportunities. Fair. So if you're picking with the trend and you're right 40 to 50% of the time, but when you're right, the moves tend to be larger, or they tend to be large, relatively speaking, where you get some good follow through. That's all I care about. That's it. That's all I care about. If I can be in that 40 to 50% win rate and I can make 1.5x on average on my winners than my losers, sign me up for the rest of my life. I'll do it. I don't care. I'll just keep doing it. You can keep saying, "Oh, you're playing, you're getting like on the fake outs. Oh, you're getting faked out." I don't care. Again, I just the stats, the number. Like I just follow. Like I'm good. You know, inevitably you will have false breakouts, false breakdowns, where you go short. Whoops, you get screwed. You go long. Sorry, get rocked. Tesla's a perfect example. Perfect example. You go long. Right? You had the opportunity to go long here, right? Whoops. Now, obviously, if you have a stop loss in place and, you know, you manage risk, like, yeah. Are you holding all the way down? No. Are you an idiot? No, I'm not doing, you know, you have a stop loss. But if you manage risk and the moves when the breakouts occur are on average larger than what you take as your risk, and you get in that 40 to 50% ballpark, you're going to be good. You're going to be good, dude. You're going to be good. And I think it's a lot more achievable long term. So that's how I approach it. If you want to track, this is on the daily time frame, by the way. If you want to track your trades like I do on TradeZella, they make it easier. Code TC10 will save you 10%. So yeah, here we go. So like this is just one, it's 3 trades, right? But if my average win loss is in that 1.5 ballpark, it's where I want to be. If we're there, you know, that's all I care about. Get me in that ballpark. Get me in that. If we're there, dude, we are looking good. Obviously, this is a great win rate for a win-loss like this. But if we're in that 40 to 50%, we are still going to be green. Not as big. We're going to be green. And then it just becomes a game of as you have more money, as you scale up over time, you'll be making more money and you'll be doing better. And you'll be feeling good, looking good, eating good, doing good. See you guys in the next one. Peace.